So, is there a deep inherent motivation to build? Sometimes it is a mask also, to be very honest. That, hey, can my investment become a 20x? They had only built 9 or 10 games. India is actually growing in ways that we have not seen in the
Next
past.
hour, deconstructing the physics of these outcomes. Karthik, welcome. I'm so happy that you're here. We go way, way back. And this has been my most awaited podcast recording. Most people introduce you as the managing partner of Pure Capital. I want to introduce you differently. You are the engineer who wrote device drivers at Intel, the intern who broke into ITG when the industry in India was barely a concept, the investor who turned a crossword puzzle company into a $500 million exit, and the board member who navigated the most high profile valuation journeys in Indian VC history. You've seen the alpha and you've seen the beta turn negative. The world might know you with these narratives, but I have known you for over half a decade now as someone who always looks to do right by the founders. I especially remember you coming out of the toughest LP meetings with probably like the 10th no in line and reassuring everyone with the biggest smile and saying like, I'm confident this will convert. So I want to spend the next hour deconstructing the physics of these outcomes, and let's begin.
Thank you so much, Triyansha. I think you have given a much more nuanced and more exciting background to me, and really appreciate doing this. And I'm excited to talk to you. It's been a while, and excited to be talking to you now.
Absolutely. I want to start with leveraging your Intel background. You spent 4 years at Intel optimizing cycle times and writing low level code. In software engineering, there is a concept of technical debt, that is, shortcuts you take now that you pay for later with interest. So in VC, there is this concept of governance debt that we can think about, where terms you sign, valuations you agree to, both seats that you give away. Looking back at the 2015 to 2019 boom cycle, how do you think this concept of governance debt has evolved in the Indian ecosystem, and how do you think about it now?
Yeah. So yeah, I think it's a moving target. We are all working towards increasing our diligence, being better at governance, and that's a constant evolution. But there are cycles where you tend to start prioritizing one over another, where you put governance also in that bucket. That's how I see it as, where there are a few times where many founders and investors alike have said, we will sort for governance later. Let's just do the growth part first. But today I think it's a lot of lesson learned. Governance is like the bedrock. I think that is what makes you. If I take the analogy of driving on a highway, governance is ensuring that the road banking and what you trust the road to do for you, you can actually trust it, and then you decide whether you want to drive fast or drive slow to reach your destination. I think that's how I would put governance as. Governance is like a bedrock. You got to make sure that which drives trust is the bedrock. And what you do on top of that, you can always spend a lot more time, be smarter about it, build a company faster, broader, deeper. But governance is the bedrock. I think many founders, and today there are many founders who have seen full cycles, investors who have seen full cycles. We are able to appreciate the value of this. And even a decade back, I would say that we had not seen the full cycle. I think I would attribute most of the issue to that. The intent possibly has always been that, look, we want to do right. But somewhere people felt that, hey, we can always address this later. I feel and believe that today people believe governance to be a bedrock. And that's the right way to look at it. You may still see some places where it may not be the bedrock. It's high time that everyone looks at governance as a bedrock and everything is on top.
I think this reflects in how I've seen you operate very closely as well. And I think even from like the smallest of things to the highest stakes things, I think you have held that value very close. So how does it feature into diligence today? When you diligence a company like Flash.co, does your engineering brain actually look at the stack, or is like technical due diligence a myth in early stage VC? because the code will be rewritten anyway for some of the startups. So just a sliver of governance in technical due diligence. How do you think about it?
Especially at the stage that I typically look at, we are looking at many of these companies which are pre-PMF, and whatever
Mm.
code you have written, it will completely be ripped off and something else is what will drive value in the future. So diligence at the stage that I come in, what we are really looking at is, are the founders thinking right? And it's a lot about the integrity part. It's a lot about, if you are building a certain product, is there the right intent with which you are also pumping in more capital behind marketing? Now, we have one company in our portfolio which has pivoted at least 3, 4 times, called Terra. And
Mm.
we have had very clear, open, honest conversations to say that, hey, look, you don't need to pump in marketing to show that there is user growth just for the sake of showing user growth. Let's take the right call. There are certain metrics that we need to see of what is the retention that we need on a D7 or D30 to build that comfort that this product actually can take off. And that's when we'll start spending marketing dollars. Otherwise, we are not spending marketing dollars to acquire users just to show that, hey, look, we have 1 million users, we have 5 million users, and then there is no substance there. All that starts with open, honest conversations. Are you really having those conversations right from day one to say that the goal is common? There is an investment happening, not with a mere hope that this will be a multi-bagger, but there is a method to the whole thing. Here are the iterations that we will do. Here are the features of the product that we will build, where both of us align that this can actually create value. And again, we would not take ourselves as experts, as investors. Although I've been an engineer, I would say that, engineer today is, every month is a very different world today. So I can't bank on what I've built 20 years back to do a diligence on the tech stack. We try to bring in experts. We try to bring in relevant experts in the technology field who are in the thick of things today to help us with the whole diligence process, where we're also trying to see the architecture. Are you thinking the right way? Are you thinking scalability from day one? Those are the aspects we try to look at. But day one, we are trying to understand with the founder, are we aligned that here is a market to which we can build, and is this a product which is worth building? That's where it really starts. And I would boil it down to open, honest conversations, alignment of interest, and ensuring that you can be the first person for the founder to talk to if things are not going well.
It makes me very curious when companies are pivoting and have seen both sides of the coin. Like you mentioned that a company has pivoted twice or thrice, and that's pretty normal. But at the same time, I have seen founders being afraid to pivot as well, or probably pivot too late and being jittery about bringing that idea even to their investor on board, who is probably like the first person who believed in them. So, how do you exactly make founders comfortable in bringing this conversation to you that it's not working? How about we try this? It sounds very simple, but people do sweat over it.
I don't know. I think it really boils down to intellectual honesty.
Hmm.
Uh, and the relation that you're trying to build. Are you saying it is actually about open, honest conversations. It goes back to that. When you're having a conversation with the founder, see, there are two approaches to have conversations, and many leadership books talk about this as well. Now, when you actually go and ask for a result and don't understand the process, you can actually get great results because you're not trying to insert yourself into the problem. You can say that, hey, look, I need this delivered. I don't care how you do it. That's one approach. The other approach is to actually build deep empathy and try to actually go understand the problem. Keeping that very fine balance in your own mind that, hey, look, I have a responsibility to drive results, not to just sit, empathize with the founder. So it's really about building that right combination where you're saying that, look, ultimately, let's all be objective here. We need to create results. But at the same time, if I'm coming and asking for the result, I think I've already asked that when I made the investment. I make
Hmm.
it very clear that when I'm investing, I'm not looking at this becoming a 2x or 3x. I'm looking at, hey, can my investment become a 20x? That result has already been established. So I don't need to keep repeating it because we are dealing with smart founders. They already know why we've invested in. Having said that and that out of the way, and we already make it very, very clear with founders that, hey, we are partners in this journey only for a certain period. I invest and I do look at getting an exit in 5 years or so. I would like to see how I can get a 20x, 30x, 40x. Done. The conversation is done. You've invested, money is in. You know what I'm expecting, and I know what I want delivered. Leave that aside. Now let's get into okay, how do we collectively make this happen? You are obviously doing 95% of the stuff, but is there a 5% where we can help you? Because the goal is very clear. If I can get a 20, 30, 40x for my investment, you will also benefit, or employees benefit, everyone benefits. So we don't need to keep harping on that goal every now and then, but rather make sure that that understanding is very clear in the beginning, and then really get into the trenches and look at, if I'm having a conversation with you, is there something that I can do to enable you as a founder? And governance also comes into that, to your first question. Setting up MISs, setting up certain processes. It's not just because we want to assess and evaluate where you are. That's not the goal. It's to also make sure that you are setting yourself up for a conversation with a new prospective investor whom you need as you go along the journey. So having these honest conversations, and also many times it's also about explaining why you are asking for something, why you are doing something. We usually leave it as the unsaid, understood thing because we are in the thick of it. But a founder may not be, because the founder's perspective will be very different. Many times I actually feel that if you just explain why you are saying something, 80%, it's the 80-20 rule, 80% of the issues get resolved because you're explaining why you're saying something. Goes back to human relationships again. And conflicts usually happen because you don't explain, you don't articulate. So many times I feel that we just all need to be better at articulating our thoughts. Many times the thought and the words don't sync and leads to problems.
I think this is such a helpful lesson, Karthik, when it comes to even investors and not just founders who are trying to do right by their companies, but there is a method to doing right. Doing right and being empathetic can go hand in hand and balanced with results. And I think even for investors, this is a very useful lesson in order to manage companies better. And speaking of results, I think I cannot help but talk about PlaySimple. So the exit to MTG was a masterclass. It was a $360 million upfront, 77% cash. The narrative is that Zynga Mafia built great games. I also believe in a slightly different hypothesis. I think PlaySimple cracked an ad tech arbitrage. They knew how to get users at X dollars and sell their attention for Y dollars, for the lack of a better word. Is that assessment fair? And if it is, or even if it is partly there, then why is it so hard for other studios to replicate that arbitrage? Is there alpha in game design, as you see, or in the user acquisition algorithm? What's the secret sauce there?
Yeah, so it's now many years old. So I'm eagerly looking for the next PlaySimple equivalent in our portfolio right now. But spending 30 seconds on that, I think there's a lot more to it than just arbitrage. I think the arbitrage definitely helped initially, but there's a lot of nuance in terms of ensuring that you're able to build the tooling in-house, build the products in a very aesthetic way. From what I recollect, when PlaySimple got acquired back in 2021, they had only built 9 or 10 games. So it was not like, they were going after an index approach to say that let's build 100 games, let's just figure out what works, let's just, maximize on that. So if I just rewind that back, obviously the founders will have a lot more intricate detail to be able to share. But at a high level, I do believe that there was a lot of thought into even getting into those 9 games and putting a high conviction behind it. And many times I've had this conversation with the founders back then as well. I see the studio business very similar to VC business. And what they did was a classic learning for me as well, where what they did was high conviction investing. And they put high conviction behind those 9 games and pumped more dollars behind the ones which were doing well, and they got it right. And I think that's what, as peer capital, we're trying to replicate also in some sense, to say that, hey, look, we are seed investors. We're investing before the PMF, but we are not going and investing in 50, 60 companies. we're actually investing in less than 20 companies. And we are trying to see how do we put high conviction behind our investments and kind of double down on the ones which can actually create value. So I think in short, it was a lot more than what meets the eye as arbitrage. There was a lot of thought behind game selection. What are exactly the changes that you will do to make the game successful? What tools should be insourced? What tools should be used as external third party tools? Where do you go for user acquisition? What are some of the tweaks that you will do for user retention? How do you insert monetization avenues? How do you continue to keep exploring in-app monetization, although bulk of it was ad driven? How do
Hmm.
you keep experimenting, keep the innovation alive, and make sure that you are at the front end of the evolution? Because from what I understand, the company has scaled even faster in the last 4 years. So definitely there's a lot that they've done where despite many external factors like IDFA, the company has continued to kind of grow. So I kind of use that constantly in our journey and say, how do you keep doing that high conviction investing behind a few ideas than spreading yourself too thin?
I feel like this is going the Charlie Munger and Warren Buffett way of VC investing world, where you pick up the high conviction bets and very thoughtfully decide that probably like majority of them you would double down because that's how convinced you are, I guess.
You're uh, putting too many words now.
I'm confident, Karthik. I do want to touch about another angle on the deal, which was I believe, the $150 million earnout attached to it. And earnouts are notorious for probably being value destructive because incentives misalign post acquisition. But you did mention that the company has done really well in even in the last 4 years post acquisition. So, as a board member, how do you structure earnouts so that founders don't just Western rest or get, again, for the lack of a better word, screwed by the acquiring corporate overlords?
No, I wouldn't take any credit for structuring that. I think it's the founders who really did a great job, where it was more of, hey, the acquirer also wanted them to continue to build, and they just made sure that it was the right thing. And I would actually credit the founders to make sure that they did it right by investors, they did it right by their employees, by their by themselves and by the acquirer. So I think it was just a very motivated, honest set of founders who were sitting there who made it happen. Where they didn't say that, hey, let's give a smaller exit to investors, create more upside, nothing like that. They gave a great stellar outcome to investors. They created enough outcome for their employees who actually had strived through the years, and they made sure that they delivered for the acquirer as well. So I think it's a classic case of just intellectually honest founders sitting at the helm and doing what is right. So in that example, I would say it's founders doing right by investors, employees, acquirers, stakeholders.
That's a lot to learn, I think. Especially finding founders who are committed to doing right by everyone involved, especially when the stakes are this high. And it's easy to say that I want to rest my laurels here. But I think it's similar to the VC world as well, if I think about it, that it's a job where the feedback loop is 7 to 10 years, and your day to day is effectively managing other people's existential anxieties, founders running out of cash, lawsuits, pivots. So, what is your personal operating system for emotional regulation? Do you have a specific mental model that prevents founder panic from becoming Karthik's panic? And like I mentioned earlier, that you had the biggest smile even after the 10th LP rejection. So, how do you keep that smile real and not just a mask?
Yeah, so I think sometimes it is a mask also, to be very honest.
Mhm.
And I think you're signing up for a long game. I think that's the original thing. One is that where you're signing up for the long game. And that's what we are trying to assess with the founders as well. Is there a fundamental deep motivation to do this despite all the odds? The founder's journey is never easy. You have a lot many easier paths to fame, money, freedom. There's so many easier paths to do it. You don't necessarily need to be a founder to do it. So, is there a deep inherent motivation to build, kind of run through it for a decade plus? Is the first thing to really look for. And how do you assess that? I just feel there's no right answer, but what I've always found is that when you're talking about some of these aspects and giving that comfort in your conversations with founders that the founding journey is not the only way to success, and build that comfort with them as well, that they're also aware and you're kind of assessing that as well. Through a few conversations, you are trying to assess that. Are you in for the long game? The second thing is, you have to have various mechanisms to overcome some of those failures or slow down that you may experience in the journey. And I have found that having co-founders is a great way to bridge that gap. So for me personally, I lean on my co-founders. So we keep having these conversations. And the good part is that all three will not be low at the same time. So if you are low, you have two others to jack you up. So that keeps you going in some cases. And then I think just not putting your entire life to be only the one professional thing that you're doing is also very important. Focusing on your life outside, focusing on your personal relationships, family time, uh, health. I think all of those play a role. And recently in the last year or two, I've seen that just starting the day with a fitness regime just keeps your energy so high. I think you don't really worry about any of these things. So that's the biggest thing that I've seen. Now I can see why people who are fitness freaks are kind of addicted to fitness. I see that as a great energy booster.
I think that's a great tip there. So, is that like your New Year resolution now to start your day with some fitness regime?
No, I'm already doing that. So there's no New Year resolutions as such, but I've already been doing that. My co-founders are more focused on that than ever. So
Nice.
I find the motivation there also.
Nice. So, fitness startups listening to this podcast, you know what to do. So, Karthik, I know that you have been switching gears a little bit. You have been betting on the Indian consumption story, but the data seems to indicate that India consumption is K-shaped. The mass market is hurting. If you're building for Bharat, tier 2 and tier 3, what is the specific data point that gives you conviction that these users have the wallet depth to pay for software or high margin goods today? And are you betting on income growth, or are you betting on your portfolio somehow being able to extract value from a stagnant wallet? How do you think about that?
So the first thing is it's not a stagnant wallet. That's the most important thing to understand. India is actually growing in ways that we have not seen in the past. And I think what we are really betting on is India. I think that's the fundamental thing. If we look at just digital consumption, today the digital economy, give or take some numbers, is somewhere in the $400 billion, $500 billion range. The size of the digital economy in India, it's expected to grow to 1.5 trillion in the next 5 years or so. So that's a massive growth that is expected of the digital economy. And what is driving that is the fundamental rails that India has put in terms of seamless GST, in terms of seamless ability to make payments more easier, and the whole India stack of UPI, Aadhaar. It's ensured that although it's a very diverse country with diverse income groups, you're able to remove the friction points related to transactions. So when you eliminate the friction points related to transactions, then you're really focusing on solving for the consumer need. Yesterday, we were solving for not just the consumer need, but also once the consumer need is established, how do you ensure that the consumer need is fulfilled? And because there was a lot of friction in the fulfillment part, be it payment, be it logistics, be it deliveries, be it tax related aspects, infrastructure in terms of road, rail, that was slowing down things. Those are being taken up by the government at a massive speed, and therefore you are able to focus on the consumer need. Now, if you see just 2025, the calendar 2025, one of the biggest areas of investments in India has been around consumer brands. Although we don't invest in brands, what we are investing in is tech enablers of these brands. So the fundamental meta theme, if I had to look at it, is that India is growing. The income growth in each level is also happening. You're putting more money in the hands of families. There is a newer population which is coming into the working population group. So your income growth is happening in different segments, and
Mm-hmm.
they all have needs. And if there are brands which are catering to these needs, how do you ensure that you are enabling these brands? That's how we're kind of looking at it. You talked about the example of Flash earlier. Flash is another classic example of a tech enabler of consumption. Your online purchases are ever increasing. There are more
Mm-hmm.
and more brands. Your For anything that you want to look at, 5 years back you had a few options. Today you will have many, many, many options. How do you choose among them? Flash is becoming the personalized AI shopping assistant, where you say that, hey, I'm looking for this product. You just prefix it with a flash.co, the URL, and then you get a complete comparison chart to be able to decide is this the right one for you and actually go with that purchase as well. So you're enhancing that speed at which the conversion happens. So that's what we're betting on. And we believe that with the consumption story being very, very strong, where the domestic market is growing, and latest reports say that India is the growth is expected to be at 7.4% for this year, this upcoming year. So I think even if we had to discount some of that and say that it'll grow maybe not at 7.5 but at 6%, it's still much faster than any other economy that we see around the world. And when you start dissecting that further, the top 100 million who are consuming a lot more is continuing to grow. The next 200 million users are coming in with more needs. And I believe that's where there is an opportunity. In fact, I see this is not going away for the next decade. It's not just the next 2, 3 year story, because after the next 200 million, you're talking about the next 300 million. So the demography also kind of gives you that opportunity to cater to that demography, which is looking at growth, which is looking at more experiences. You're going beyond just the basic needs. You're going into experiences. You're going into food. You're going into travel. There's a lot that is happening. And therefore, technology platforms which are enabling and driving this consumption is something which is here to stay, at least for the next decade.
That's very interesting. I think the way you've broken down, Karthik, that the next 200 million or the next 300 million, and how do they look at it? What do you think is, so you did talk about some fundamental shifts in terms of how different sets of consumers are looking at the market. And I do see that your bet is more on the wallet expanding or the income growing for these set of consumers. So, what's like the next big bet that you're looking at for these consumers in terms of sector? For example, are you looking at more fitness that we talked about? Or there's a constant theory that I hear about is that the next generation is more and more convenience focused. And that's a good sign. That's a sign of growth that the next generation should be more convenience focused or should have an easier life. And that's a sign of progress. So, I see that India is also evolving in that way. Every time I come back, I see that, oh my God, this is so much easier back home versus anywhere else in the world. So, it's very hard in consumer to look at 10 years down the line and project. I would say it's harder in consumer versus in B2B companies. So, how do you peel the layers for consumer startups given that India is growing so fast?
Yeah. So I think the basic is really about, is the market expanding and growing? That's what you're trying to look at. And when it comes to sectors, what we are really trying to look at is we're trying to, again, it's very hard, like you said, to just put a broad brush and say that this is what will happen. In fact, what we are going is we are going a little more thematic. In the consumption enablers, we are saying that there are a few sectors in which we will try to go deeper. One is in the consumer products itself, where we are saying, is there opportunity for advanced manufacturing to play a role in driving more consumer brands. So, is there an opportunity for advanced manufacturing? Can you actually invest in platforms which are enabling so that more consumer brands come up? So, which is to do with people who are looking for actual products. And can you build a moat because of the manufacturing expertise that you can drive through a company? So, that's one area. The second area that we are always looking at is as wallet expansion happens and as you start going to a different strata in your own life, and also as more consumers enter into the mix. So it's actually not just wallet expansion, it's wallet expansion plus more people coming into the mix. So your target yesterday was maybe 10 million users, today it's 100 million users, tomorrow it may be 200 million users. So you have a different strata of consumer who is coming. Entertainment, it continues to be a very core need. All of us need entertainment in some form or shape. And that's why we see so many production that's happening and OTT is going through the roof. That's where the Cuckoo FMs, Pocket FMs, so many things are happening. So gaming and interactive media and entertainment as a second theme to say that hey, if here is a consumer base, what does this consumer base really get excited about from an entertainment perspective? What are some of the tech platforms which can enable that need of a consumer? And that can include experiences as well, which is essentially entertainment, right? So that's the second theme that we are looking at. The third theme that we are looking at is you're always looking at ensuring that your financial well-being is very important. So what is the consumer looking at to ensure that you're financially healthy? So that's the third area. The fourth area is physically healthy, both mental and physical. And to say that, hey, how do you ensure that this consumer has more capital, more money now at their disposal? So how do you eat healthy? How do you do stuff in a healthy manner? So that's how you're kind of segmenting and saying, let's go deeper into these. And if I have to put it in an archetype, how, usually you put as sectors, I will say consumer, gaming and entertainment, fintech, and healthcare. That's how you would kind of put it. But the background to this is like I explained, how I do this.
So it's picks and shovels strategy for a new India meeting foreign buffet investing with high conviction. I'm so excited about that, Karthik.
Yeah, we keep learning and getting inspiration from all these stalwarts and try to replicate it.
Confident that actually I'll be looking at all the portfolio companies a lot more closely to see what comes out next. I think this has been incredible. Want to close with a rapid fire round. Short questions, fast answers, whatever comes first to your mind, 30 to 60 seconds. What's an overrated metric in 2025?
Overrated metric in 2025. Say, yeah, in India at least, there was a lot about the AI factor. I'm sure it's in the US as well. But how well can you spin in an AI piece into your story was the most overrated thing.
Yeah, yeah. I heard that too. It is overrated. I definitely think so. All right. One board meeting habit that you hate.
I also do that, but getting into the meeting and then just going with the presentation flow, I hate it. I would rather that the material is shared earlier, discussed earlier, or at least read through earlier, so that you're coming in for an active brainstorming discussion than a mere update. I think that's a practice which unfortunately I also do. So going back to your New Year resolution, I think maybe I'll change that this year to say that it's important to share earlier, read earlier, have meaningful discussions to make the most of the board meeting.
This is a question that I have asked every single one of our guests, and I have got very interesting answers. Are you more excited about a new AI model dropping? Could be a foundation model or an AI based app coming into the market?
AI based app, yes, there are many of them which are coming up every now and then. But I think increasingly the capability of the foundational models, which is just growing at such a rapid pace, is something which is always not just exciting. It's something that you always are also constantly thinking, hey, if this is the case, how do you invest in vertical AI where any new model can actually solve for all these things in the future? So I'm more excited about what are some of the areas where you have a defensibility because of the way you are able to connect the dots, which is not already solved uh, through something which is already there.
Like I said, always the most interesting answers. And I think I just realized like this is the AI factor in my questions in the podcast now, given that we are doing AI factors. The last one, because you keep coming to the Bay Area as well. Bangalore traffic or Bay Area rent, which is a harder problem to solve?
Experience the Bay Area rent,
Mhm.
but Bangalore traffic is not solvable. The only way we can solve is better infrastructure, which is not happening. So I guess the only way is we have more expansion, and I think the good part of Bangalore is it's expanding. I've now shifted to outskirts of Bangalore, so at least when you're home, you don't face the traffic. But reaching home, you face the traffic. But yeah, there is maybe still some hope. On a serious note, I would say that a few measures can actually solve Bangalore traffic. But I guess the when that will happen, nobody knows.
It happens soon. I'm a strong believer. All right, Karthik, you've built device drivers, you've engineered massive exits, and you've stood in the trenches when companies went to their most wildest journeys. The transition from empire building at Chirite to probably guerrilla warfare at Pure Capital is a story to watch. I think it's going to be one of the most phenomenal stories of the Indian ecosystem. And you've said before that fundraise is not a milestone of success, it's a milestone of responsibility. I think you're living that. So thank you so much for being here. And I'm so glad that we got to do this.
Likewise, it's always a pleasure to talk to you, Triyansha. And yeah, so this conversation has also piqued more thoughts for me, and I've already started to count the New Year resolutions that I'm making now on this podcast. But yeah, I'm very excited about what lies in the future, and I think most excited about every day being a learning day, and that's something which keeps the energy alive. And super excited about what stays in store.
Maybe we do an year-end episode to see where are you on the New Year resolutions.
I know we should do that.
Right. Thank you, Karthik.
Thank you.